Housing prices and new construction are falling. Not to mention mortgage rates are rising. And talk of a housing market downturn is also spreading among both buyers and real estate investors. Some predict a sharp drop while others predict a slow, milder decline over the next year. In any case, a slew of recent housing reports have added fuel to the fire. The latest National Association of Realtor data. Right now, high mortgage rates have weakened demand and builder confidence in new construction single-family home segment fell about 8 points in October, creating an unhealthy and unsustainable situation. This week, the existing home sales in the United States fell 1.5% to 4.71 million seasonally adjusted units in September. Despite the fact that the decline was in line with economist expectation, it was the 8th consecutive month decline. It's also the first time that existing home sales have fallen for so many months in a row since 2007. So total home sales are down 23.8% year on year, with the number of homes on the market down 2.3% to 1.25 million units. All while the median price of existing homes fell from $389,000 to $384,000 month on month after breaking the 400,000 barrier for the first time this spring. With that, the market is clearly turning. Median price falls could persist into early 2023, if not beyond. A 20% decline in the market is possible in certain areas, as we're seeing. The recent increase in mortgage rates to over 7% has caused a further drop in mortgage demand, and we can assume home sales will continue to drop until early next year. To restore housing market equilibrium, prices must fall significantly, and because the supply curve for housing hasn't yet flattened, falling demand would lead to lower prices, and with that we should expect a drop of 50 to 20% in certain areas in the coming year before bottoming out. Although some areas will show a little bit of an increase, specifically areas where people are moving to and moving out of. So states like California, New York, people are moving out of, but people actually moving south to Florida, Texas, Arizona, those will probably go up. So the main question is, are we on the verge of a housing market recession? The last time the housing market was this frantic was between 05 and 07, which led to the housing bubble crash in 08. Now that the housing boom is under threat from rising mortgage rates and dwindling supply and demand, it's reasonable to wonder if we're on the verge of another housing market downturn. Despite ongoing declines after a year of record-breaking price increases and record low mortgage rates, a severe housing market recession appears unlikely. Instead, most housing economists believe that any correction will be minor. In other words, another great recession like housing bubble is unlikely. One notable difference, though, between now and then is surprising economic resilience displayed by most consumers throughout this pandemic. Stricter lending regulations, many of which stem from the Great Recession, also play a role, and the average mortgage buyer nowadays claims more equity and higher starting credit rating. Furthermore, leery construction firms have moderated new construction to avoid overshooting supply. Unfortunately, it appears that this fact has continued to support prices while suppressing inventory, preventing both demand and prices from dropping organically. Instead, skyrocketing prices and rising mortgage rates are largely to blame for the decline in demand. So while a housing market recession is unlikely, a slow leak and release similar to air escaping from a balloon is not possible. Alright guys, thanks so much for watching my video. If you got any questions, leave a comment below and I'll see you in the next video.